Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news and data that you need ahead of the Wall Street Open. Coming up, global investors remain cautious ahead of that looming US inflation data as they search for clues as to where the Fed is headed to next in terms of monetary tightening. And AI fatigue. Bank of America research suggests heavy tech outflows since September 6. We'll get you more details on that and where the smart money is headed very shortly. And Eli Lilly's diabetes drug gets the green light from the United Kingdom. More on why this is such a big piece of news for the pharmaceutical industry. Good afternoon, I'm Angeline Ong, and welcome to this new edition of Beat the Street. Not long now before Wall Street starts trading, this is how equity markets are looking. A lot of caution, as you can see there, subdued going into what will be the main open. Just showing you the closer view picture as well. This is the hourly picture on IG markets. Wall Street there showing, quite a cautious stance. Similar picture there for the Tech 100 as well, and also showing you the volatility index, because that is still coming down, as you can see there, 1607 after spiking slightly at 1635. It's now coming back down. Much of this is down to a lot of weak data that's been out recently from China. Also wanting to show you the S&P 500, because in terms of that index, we have been seeing quite a lot of movement when it comes to higher highs and lows as well. The S&P 500 posted 13 new 52-week highs, just showing you the weekly view there, and 26 new lows. Meanwhile, the NASDAQ, which is the US Tech 100 on the IG platform, it's showing a similar sort of trend, 22 new highs, 268 new lows. Of course, as I mentioned earlier, recent economic data, both in the US and China, have stoked worries about the global economy, and for the US, worries that interest rates could remain higher for longer. The state of the economy and those inflation figures, of course, will be key to which direction the market moves in the coming week. Craig Fair, head of investment strategy at Edward Jones, call the recent decline as a cautious defensive stance. He says that there is a very, very small eye of the needle with which the Fed can thread monetary policy that's sufficiently tight, but not so tight that it wrecks the economy. It's a small eye, he says, but it's not completely closed. As for China, as I mentioned earlier, we've had quite a few data points signaling a weaker economy there. Services weighed on the markets. Its data showed a worsening of that industry. And there's now real concern that if the Chinese officials don't unveil more stimulus, that the economy could really start souring. Amid all that, IG's senior market analyst Axel Rudolph has been watching the US dollar versus the yuan. But more importantly, he has just spent a huge amount of time in China. Axel, how was your trip and what did the technicals indicate?
My trip was lovely. Thank you, Angeline. I can highly recommend China to anyone. I know there are not many European or Western tourists going to China at the moment, but it is just fascinating as a country. But yes, you do notice slower growth. You do notice a lot of building sites. I mean, this is just anecdotal evidence with basically cranes not being operated, etc. So a lot of housing stock being built and not finished. With regards to the currency, though, what is interesting is that if you look at the US dollar, which is on track, I believe, for its 8th consecutive week of gains, we can see here against the Chinese yuan that we have now risen to levels last seen in November of 2022. And you might remember back in October of 2022, we had an all-time high in the US dollar Chinese yuan exchange rate at slightly above 737. At the moment, we're trading around 735.50. And as you can see here, we're on track for 5 consecutive days of gains as the US dollar continues to appreciate, not just against the Chinese yuan, but against a lot of other currencies as well. And I believe the US dollar basket actually trading at levels, I think it has the longest winning streak since 2014, if it does close this week on a positive note, which looks very likely.
Now, Axel, the other thing that many investors are watching out for is this latest escalation of the tit for tat between China and the US. The latest being reports that China is expanding its iPhone restrictions to local governments and state-owned companies. How do you think this might play into the currency markets and the economy as a whole? Or do you think it's just tit for tat, given the timing, given we've got that Cupertino event from Apple unveiling its products next week?
Well, I mean, with regards to Apple and the timing, yes, you're right. I mean, on the 12th of September, we're supposed to get the iPhone 15, and this happens in China. So yesterday, and you can see this here on the daily financial bet, and the day before, we have come off very sharply. And you can see here, the last 2 trading sessions basically wiped out the previous 1.5 weeks of gains, and we dropped by up to 8% yesterday before stabilizing slightly. So investors today will have to watch out for the low that was made back in mid-August. If that were to give way in the next few days, then we could see a more significant correction lower in the Apple share price. Because after all, China is Apple's 3rd largest market, and it accounts for about 18% of its total revenue. And if you have more and more people in China not buying iPhones because they're no longer allowed to do so, then obviously that could have a really detrimental effect on Apple's share price. And we'll have to see here. For me, technically speaking, it's the 171.96 low from mid-August. As long as we stay above there, this is just a brutal, I admit, but still it's just a correction within a longer term uptrend. As you can see here, the Apple share price has risen all of this year and only started to sell off at the beginning of August. But if we were to fall through 171.96, the low from mid-August, then I am afraid we could actually pretty quickly head back down again towards the red line here, the 200-day simple moving average, around $163.60.
Thanks very much, Axel. Really interesting there. Just chatting with Tasty Live's Anthony Batista as well, who said that perhaps this could be an entry point for those wanting to get in on Apple or buy more of Apple stock, given that it is such a big part of every portfolio, whether you are an investor or a consumer right now. Also denting sentiment about China, the world's 2nd biggest economy, data which showed that exports and imports there fell in August, and this has had an impact, which is why I'm showing these US listed Chinese firms like Pinduoduo and also Alibaba as we count down to the open. This is actually quite an interesting space because both Chinese and the US economy are interlinked, and the health of one largely depends on the other, given the trade. Just showing you Baidu as well, because this is an all sessions stock on the IG platform. As you can see, not doing too well at the moment, down about 1/3%. Now, moving on to technology and artificial intelligence. Are we all starting to get really tired about hearing about AI? Well, the latest research from the Bank of America suggests the answer could be yes. The Bank of America's Global Research Facility suggests that we're seeing the first outflow from tech stocks in almost 3 months. And in the week to Wednesday, investors poured money into cash, equities, and bonds and ditched gold and emerging market equities. As for the rest of the year, its outlook is higher for longer oil prices, US dollar and yields, and tighter financial conditions remain for September and October as risk assets. And the actual number is quite staggering. Equity funds, says Bank of America, saw $2.2 billion of inflows in the week to September 6, citing data from provider EPFR. But Bank of America also said tech stocks saw $1.7 billion in outflows, the first in 11 weeks. Turning to the drug sector, and Eli Lilly's diabetes drug Mounjaro has gained the backing of Britain's healthcare cost effectiveness watchdog. Now, what this means is that it could now be an option, this drug, for patients with poorly controlled type 2 diabetes. What's interesting about this space as well is that many drug makers now, with COVID drugs and that revenue stream coming and trickling offline, many are looking to drugs like diabetes, like heart related drugs, obesity related drugs, to then drive revenue growth in the next 10 years. Just showing you Eli Lilly's share price there ahead of the open. Final guidance is scheduled to be published on October 11th, after which Lilly's drug will be made available in the UK's National Health Service within 90 days. Some 5 million people, this is an estimate from Diabetes UK, some 5 million people in the UK are living with diabetes. Another stock we're watching, Kroger's, just out with its numbers. IG's Jeremy Naylor has been watching to find out what this tells us about the US grocery market. Jerry?
This is an amazing story, actually. In the last half hour, we've got a ton of news coming through. Let's start off with the earnings, first of all. I mean, bearing in mind, this is a company with 2,800 stores across 35 states. It's the biggest US dedicated grocery store in the States, but it's also got 28 different names that it trades with. Second quarter earnings coming through at 96 cents. Now, I've been looking for 91 cents, so that's a better than expected number coming through. But for me, the disappointment's coming through on the revenue side. The revenue has missed expectations at 33.9 billion. We've been looking for 34, and the outlook is a little bit less as well, which is causing some disruption to the shares on the downside. Now, it's not a stock which trades all sessions on the IG platform, so I'm not going to show you that at the moment. What I'm going to show you, though, Angeline, is interesting because this is the Ocado share price. Now, this is the interesting angle to this, that Ocado, the London-listed retail logistics company, has a US partnership with Kroger. It's had this since May 2018. It provides back-office tech. Now, in 2020, that was extended to include Ocado Group's in-store fulfillment solution, in other words, organizing stock to ensure in-store shelves are kept up to date and online, that deliveries are taken to where they should be. And interestingly enough, this is a 10-minute candle chart for Ocado. So I thought perhaps to see if there's any positive reaction on from these figures. Now, there has been a little bit of an uptick. I can't think there's necessarily going to be too much dependency on Kroger for Ocado's numbers, or indeed the other way around. But I just thought perhaps I'd show you that. But I do want to take a look at some of the other news that's come through, because I think there's two other elements of this news headline coming through today. Kroger has reached an agreement in principle with plaintiffs to settle the majority of opioid claims that could be or have already been brought against Kroger and the local authorities in the US against the company. It's amid allegations that Kroger took part in unrestricted supply in these drugs, and of course over here opioids, strictly, tightly controlled. But in the States, there was a way in which these could apparently be let loose on a less restriction. And the company is facing a $1.2 billion claim with a total charge of $1.4 billion. Now, many are saying, well, it's just tiny when you consider the size of Kroger. It's $32 billion market cap company. So that's that. What I do want to show you now, though, is what's happening with Kroger shares, because as I said, it's not an all-session stock on the IG platform, but if you look at what's happening here, I'm hearing from analysts that we could well end up with a 4%, up to a 4% drop, they say, not necessarily 4%, but up to a 4% drop. I've seen 3.5%. But I think interestingly enough, since we've had the earnings come through, Kroger and Albertsons, this is another store chain in the States, have announced they've got a joint venture with a number of stores. They've announced they've agreed with C&S wholesalers for the sale of 413 select stores across the US. And this is going to bring money onto the balance sheet overall. But nonetheless, I think partly of what it is that investors are probably looking at is the outlook. And this is why I want to talk about Kroger, because the outlook in the States is not as rosy as I think some people think it is. And there may well be seen by some people to be ways of buying cheaper than Kroger's in the States. In terms of the size, as I said, it's 32 billion market cap. Walmart, 440 billion. That gives you some sort of scope. Now, let's take this chart out just to show you what's been happening. This is the very long chart for Kroger. This goes back to pre-century. So that gives you an idea as to where we are in terms of the grand scheme of things. So this is a big retracement now on from the highs that we've seen. But interesting enough, this line at $43.60 could be significant. And as if you see that we do drop 4% today, that would take it then down to the lows we had back on the 15th of June, which was at that 43.60 level, which was the low point that we've seen recently. And that could well anchor shares in today's session. Analysts aren't suggesting it's going to go any lower than that. I wonder whether perhaps maybe it might not even be as low as that when trade gets underway a little bit later on, because earnings were better than expected. Revenue was a little bit worse. Yes, there is a little bit of a softer outlook from where we go on from here, but there's going to be money brought onto the balance sheet as a result of that deal to sell stores with Albertsons.
Thanks very much, Jerry. Really interesting stuff, given its peers, Walmart, Target, have also recently warned of deteriorating purchasing power of its less affluent customers. Just checking on another two stocks to watch. DocuSign is one that we are watching for you. The e-signature product provider beating second quarter results estimates and also raising its annual revenue forecast. This is the company that many companies around the world use for documents that need to be signed digitally. Also showing you GameStop, because this is another one that is moving and could move even more during the main session. GameStop, as you know, meme stop that's been making headlines in the last year or so. It's currently looking like it could see a lower open. This is on a report that the US Securities and Exchange Commission was investigating the video game retailers chairman. This is not all sessions on the platform, which is why we are watching that closely for you. And finally, in the energy sector, workers at Chevron's liquefied natural gas projects in Australia, I can tell you that they have gone on strike. We've been watching the story for you pretty much most of this week. Talks have broken down, and what's even more interesting is that no further talks are being scheduled. Just giving you an hourly picture there, because this is an all-session stock on the IG platform, and we are currently seeing that it is down ever so slightly, but much of this has been factored in already as these talks have been ongoing throughout the week. This is a key story for us because many concur that the immediate impact is not yet to be felt. However, if the strike continues, it could potentially mean that gas prices start to really spike as we get into the winter months. European gas prices, for example, spiked as much as 12% after this strike news. Those facilities in Australia account for more than 5% of global supply. And just before we go, oil prices, just want to check in on that for you as well, because they have As you can see here on the hourly, let's take a view on a daily chart for you. They have declined slightly. Let's see where it is right now. It is down actually, it's come back up again, around 8%. However, they were down earlier, and they are, if you widen this chart out, still at its highest level since around November. This is as supply concerns remain. Meanwhile, the dollar, just want to check in on that for you as well. The dollar is another one that we're watching out for, along with spot gold, because as this inflation debate continues and what the Fed's next steps are, these two crosses have seen slightly more volatility of late. Let's checking on the dollar basket for you, as it's called on the IG platform. Here we go, and it has been traversing higher since the 31st of August, and if you look back to the 16th of July, it's been gaining ground since then. 9942 is the figure, and it's around 10458 right now. That alone from that point is a gain of around 5% or so. Now, the oil, as I mentioned, is related to oil because, of course, a stronger dollar does have an impact. We're watching out for the Baker Hughes rig count as well. Since the start of this year, the number of operational rigs have been in almost constant decline. Last Friday, the total rig count fell by 1, taking the total rig count down to 631. The number of active oil rigs remained at 512. Now, just before we go, a quick look at how the market is looking. And we are still, if you look at this chart here, still looking at a subdued start ahead of the open as investors wait on those looming US inflation figures. Well, that's it for this edition of Beat the Street, the show that follows the trading action, helping you to position yourself ahead of the opening bell. For more trading insight, follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.